Did you know there's some common rookie mistakes that could drastically kill the likelihood of selling your business for maximum value? Watch this video and learn what not to do if you're thinking about selling your business. Hi, I'm Trent Lee, and over the last 5 years, I've been named the #1 business broker in the country for the most closed transactions. I make these videos so that you'll learn what to do or what not to do to focus on selling your business and one day hire me to help you do that. Mistake number 1, not properly using weighted averages to calculate sellers' discretionary earnings. I've made other videos how to calculate sellers' discretionary earnings, but let me focus on not using proper weighted averages to calculate it. All too often, I see business owners and even business brokers not properly using a 3-year weighted average. This means just because you had a great year last year, you can't value the business only based on last year's revenue. You need to have a consistent 3-year weighted average to properly calculate the free cash flow of the business so that you can then back into the debt service ratios that a bank or an SBA may require for a buyer. Mistake number 2, not paying fair market wages to family that work in the business. This is a huge mistake I see in family businesses. Sometimes the parents or the kids are working in the business for next to nothing, but they work in the business full time. In fact, I just had a restaurant that was owned and operated by a husband and wife and their daughter. The husband paid himself a salary, the wife worked for free, and the daughter was a bartender that worked 40 hours a week, basically for free. Here's the challenge. When we value or sell the business, we can really only add back one owner's wages. So other family members who won't stay post-closing, we need to calculate the fair market wages to replace them as employees. Once we factor in the fair market wages to replace them, this lowers the valuation because now the free cash flow or the seller's discretionary earnings is lower because the sellers weren't properly paying those that worked in the business, family or not. So a good business broker or a business appraiser will help you properly do this. Mistake number 3, selling a business based on potential. If I had $1 for every business owner that called me wanting to sell their business, that told me their business really has a lot of potential, I wouldn't have to do this anymore. I hear that all the time. If a new buyer would fill in the blank, the seller tells me they could really double the size of the business. Here's the problem. Valuations are not based on what-if scenarios or potential, at least not in Main Street business market. Here's a key takeaway. Buyers will buy your business because it has potential, but they won't pay for potential. That's a big difference. They will pay for historical performance. It's up to you to either turn the business around and realize that potential so that it becomes actual historical revenue, or it's up to you to come to terms that you're selling the business with unrealized potential and a buyer's not going to pay you just because it has potential. Now, they'll buy the business because it has potential, but they're not going to pay for potential. They're going to pay based on historical performance. Mistake number 4, let's say you got a bunch of PPP income or an EIDL loan. Guess what? That doesn't count as income to your business. Just because the government shelled out a bunch of money and now we're dealing with the repercussions of inflation and the government pumping too much free money into the system, you can't count that as income in your business. The problem is too many business owners who are doing their own accounting classify it as income and overinflate how much true net profit the business made. One-time government stimulus checks are not true income. Therefore, it doesn't count towards the gross or net income of your business. You need to remove that income from the calculation and only factor in the true business income. This is why taking a 3-year weighted average approach is key. One good or bad year, for that matter, should not make or break business valuation or the transaction. We need to normalize the financials over a 3-year period and properly calculate the income pre-COVID, during COVID, and post-COVID and take a weighted average and make adjustments for that COVID period. All right, mistake number 5. I've seen this way too many times. Business owners or a business broker gets way too aggressive with the add backs. Sloppy add-backs mean a sloppy valuation, and it's usually a sign of an inexperienced business broker or a seller who doesn't really know what they're doing. Add-backs are fine as long as they're reasonable, justifiable, and legal. And, this is an important one, show up on the tax returns. We can't add back stuff that you didn't write off to begin with. Too often, sellers will want to add back unreported cash, or they have a bunch of personal expenses that have been written off as cost of goods. This isn't legitimate, and it ends up hurting you in the long run. So next time your spouse goes to Costco and buys the family groceries, don't let her use the business card and call it advertising. It's just not worth it. Not to mention, it's probably not legal anyway. The next mistake is not accounting for working capital. Sellers always add back, and business brokers always add back the depreciation, but rarely budget for the equipment replacement or the servicing each year. This is a huge one, especially in deals where there are multiple trucks or heavy equipment. Also, watch for deferred maintenance, especially in the last year before the sale. Make sure they aren't pushing off, or make sure you aren't pushing off maintenance and repairs only to kick the can down the road and let someone else do those repairs. A real good buyer and their CPA will come in and they'll inspect the equipment, and it will need to be in working order, and we can't add back all depreciation expecting that a seller won't have any of their own maintenance and depreciation to begin with when they take it over. If you're thinking about selling your business, reach out to me to find out how much your business is worth. The valuation process is completely free and there's no obligation. My goal in making these videos is so that when you're ready, you'll reach out to me. I can do a fair market business appraisal for your business at no cost, and we take it to market to find a buyer for you, also at no cost. I don't get paid unless and until I find a business buyer for you and we close the transaction.